I want you to imagine for a moment that you started investing in 1998. The world's going mad for the internet. New companies are popping up out of nowhere, and every investor is convinced they found the next big thing. So you take all your money and invest it in a few tech stocks just because they have catchy .com names. And for a couple of years, your money keeps going up, and everyone thinks you're a genius. Until the year 2000.
Nothing short of breathtaking. A points drop never before seen on the US markets. Traders and investors shell-shocked. And spare a thought for Bill Gates. The Wall Street collapse cost the world's richest man $1.8 billion this week alone. When the bubble burst, the Nasdaq fell nearly 80%, and only 48% of .com companies managed to survive. I watched many of my friends lose millions within a blink of an eye. And even though it was a crash I'd half been expecting, my own investment still took a hit. The crazy part is, the internet was the next big thing. But even then, the overconfidence and hype created one of the biggest bubbles in history.
So why am I telling you all this? Well, fast forward to today, and I can't help but feel that same energy again. But this time, it's not driven by the internet, it's AI. People are calling it a once-in-a-lifetime opportunity, and maybe they're right. Or maybe it's the same story playing out all over again. History doesn't repeat, but it rhymes, and every generation thinks they found a new era. As John Templeton said, the 4 most expensive words in investing are, "This time is different." But is this time actually different? Well, as over 7 million of you have started investing because of my videos, I feel a responsibility to give you my honest take on this situation. So before you panic, let's take a step back and look at the 3 hidden forces behind this potential bubble, why they matter, and what you can do to benefit from all this mayhem. Right now, the fate of the entire stock market and your portfolio is being decided by just 7 companies. They're called the Magnificent Seven. These are Amazon, Microsoft, Alphabet, Meta, Apple, Tesla, and Nvidia. Together, they now make up around 36% of the entire S&P 500, and they're all locked in an arms race to dominate artificial intelligence. So even if you only own 1 share of the S&P 500, you're already betting on these companies. And whether you realize it or not, your future returns depend on how this race plays out, because every dollar these companies invest sends ripples through the whole market, from chip makers to energy companies to your index funds. And when you see how much they're predicted to pour into AI this year, you'll understand why. Let's go one by one. Tesla plan on spending $5 billion on autonomous driving and xAI, which is Elon Musk's new AI startup. Apple, $10.7 billion to make Siri smarter. To be honest, it's probably going to take more than that. Meta, $60 billion on data centers and the metaverse. Google, $75 billion rebuilding the internet with AI. Microsoft, $80 billion funding OpenAI and supercomputers. And Amazon, $100 billion on AWS to own the infrastructure everyone else relies on. That's a total of $330 billion in 1 year. To put that into perspective, that's more than the entire GDP of countries like Finland or Portugal. All that money is going into building the future. Some people are even calling it the 4th Industrial Revolution. However, all of this spending seems to be what's keeping the economy alive at the moment. And without it, the US might already be in a mild recession. So the question is, how long can it last? Well, it doesn't seem to be ending anytime soon. Global AI spending is expected to reach $500 billion by the end of 2026, with spending on power and resources for electricity demand topping $3 trillion annually by 2030. That's how bad these companies want to win the AI arms race. But this race isn't just between companies anymore. It's between nations. The US and China see AI as the key to global dominance, and they're both burning through billions to make sure they're the ones holding the reins. For everyday investors, this could go 2 different ways. If AI delivers on its promise, the next decade of investing could be just like the internet boom of the 2000s. But if the profits don't arrive fast enough, the same stocks pumping up your investment portfolio today could drag it down tomorrow. But where is all this money coming from?
It's being referred to as the AI money machine. It's the main reason I'm starting to get worried about the state of the AI industry. So let's rub some of these arrows out and walk you through how it all operates. Intel, AMD, and NVIDIA are the companies that design the chips that power the AI models. OpenAI and xAI and other smaller players are the companies that buy these chips. Then you have Oracle and CoreWeave. These are the data centers, who also buy these chips, then lease out the computing power to the AI companies. Think of them like the middlemen.
It started when investors at Microsoft gave OpenAI $58 billion in funding. OpenAI then paid that back to Microsoft to use their data centers. Microsoft then used that money to buy NVIDIA chips. NVIDIA then invested that back into OpenAI. Doing this allows each company to record that flow as revenue, which of course pushes their stock prices up. It's kind of like if I went out into the woods with a friend and paid him $1,000 to dig a hole. Then he paid me $1,000 to fill it back in. We'd then both have $1,000 in revenue.
So, what's the best thing to do with your money? Well, I'm not a financial advisor. However, these are the things I'd be focusing on if I were you. Firstly, continuing to invest. If we're at the start of the bubble, then the prices we're seeing right now could seem like bargains in a couple of years' time. That's why it's so important to set up an automatic investment that leaves your account every month and goes into a broad, low-cost index fund. Secondly, focus on increasing your income. Thirdly, focus on diversification. This means spreading your money across different types of assets. Just remember, this bubble bursting won't be the end of the world. If you understand situations like this, then you won't be the one panicking, and you'll be the one taking advantage of the opportunities while everyone else is running for the exit.